Welcome back. Finance ministers and central bank governors of the ASEAN capped a 5-day conference held in Cebu by asserting their strong commitment to push for financial integration in the region. On the central bank side, Bangko Sentral ng Pilipinas Governor Armando Tetanco Jr. confirmed the ASEAN Central Bank Governor's support for the ASEAN Integration Monitoring Directory as well as the ASEAN Plus 3, that means China, Japan, and Korea, Macro Research Office to ensure constant monitoring and surveillance of risk in the region.
We then renewed our commitments for the next stage, which is AEC 2025. This body has been instrumental in setting up the direction for the region in the next 10 years and in providing guidance on how we can reach the 2025 end goals of financial integration. From the central bank side, we initiated bilateral talks after signing the ASEAN Banking Integration Framework in 2014. We established a working group on financial inclusion.
He said a technical working group had also been established to accelerate financial inclusion, which is deemed vital in realizing financial integration and inclusive growth in the region. Tetanco also said that during a meeting in Vientiane, Laos in 2016, strategic plans were endorsed for the AEC 2025 with a focus on the specific key pillars to financial integration, inclusivity, and stability.
Embedded into these plans are various supporting initiatives on banking, insurance, capital market development, capital account liberalization, payment and settlement systems, and infrastructure financing, among others.
Meanwhile, the joint meeting, according to the Philippine Finance Secretary Carlos Dominguez, also touched on the results of the ASEAN Finance Ministers Investor Seminar held last Thursday and the updates on the Amendment Annex 1 of the ASEAN Charter.
The respective progress in the ASEAN Economic Community Blueprint and the roadmap for monetary and financial integration of ASEAN and other initiatives. We will also touch on the results of the ASEAN Finance Ministers Investor Seminar and also on the amendments to Annex 1 of the ASEAN Charter. Once again, I welcome everyone to our meeting.
On Thursday, the BSP and central banks of Thailand and Malaysia moved towards integrating the banking systems of the three countries following the signing of agreements. The Philippines and Thailand signed a letter of intent to begin bilateral discussions on banking integration. Representing the Philippines was BSP Governor Armando Tetanco Jr., while Viratay Santi Prapob represented the Bank of Thailand, the central bank of the Thai government. The agreement allows both countries to explore the possibility of allowing qualified ASEAN banks or QABs to set up shop in each other's markets.
A document which marks the common desire to explore the possibility of a full bilateral agreement under the ASEAN Banking Integration Framework. Today, we have taken the first step of a series of steps. I'm sure that there will be important considerations to address along the way, but let us not lose sight of our vision of uncovering the potential of cohesive markets and collective interests. Governor Viratay, the BSP fervently looks forward to further collaborating with the BOT. As we embark on this process, we look forward to many insights that could be learned by both sides from each other, insights that will for sure become part of our central bank's enduring legacy under ABIP.
Meanwhile, BSP and the Bank Negara Malaysia signed a declaration of conclusion negotiations on the entry of qualified ASEAN banks or QABs between the two countries. Qualified banks are well-managed banks headquartered in the region, and the majority is owned by the ASEAN nationals. Banks that apply for QAB status must be endorsed by the home country regulator and may be accepted by a host country regulator based on the bilateral agreement. Signing the declaration were BSP Governor Armando Tetanco and BNM Governor Muhammad bin Ibrahim.
Today marks an important landmark in our journey towards a more cohesive ASEAN economic community. As part of the integration process, we continue to build bridges and at the same time develop our financial system to be more efficient, competitive and inclusive, ultimately benefiting the region through increased economic growth, improve risk diversification, and contribute to higher standards of living for our ASEAN communities. Much has developed over the last 2 decades. Between 1990 and 2016, ASEAN has recorded economic growth of 5.3%, above the average global growth of 3.6% per annum. ASEAN is the 6th largest economy in the world, with nominal GDP of $2.6 trillion. Over the next 5 years, if growth of this region expands at the current levels, ASEAN GDP expected to reach $3.5 trillion by 2021. In 2015, intra-regional trade has grown to 24% of total trade. Foreign direct investment has risen to 21% of total investment, and portfolio investment has increased to 8%. Indeed, a tremendous achievement. Coupled with the region high saving rates of approximately 30% and international reserve of $730 billion.
Now, under the ASEAN Banking Integration Framework, or ABIF timeline, each ASEAN 5 country is to conclude at least one bilateral agreement with another ASEAN 5 country by 2018. ASEAN 5 refers to Indonesia, Malaysia, Philippines, Singapore, and Thailand. By 2020, ABIF targets the conclusion or near conclusion of at least one bilateral agreement for each of the 10 ASEAN members. Not there yet. BDO Capital and Investments Corporation President Eduardo Francisco admits that while they would like to expand to Southeast Asia, they're not yet at the same level as the largest banks in the region. Francisco said the combined assets of the country's 3 largest banks, namely the Bank of the Philippine Islands, Metrobank, and BDO, cannot surpass that of the big banks of Malaysia like Maybank and CIMB, and that of Bangkok's Bank of Thailand. While local banks don't dismiss the opportunities of ASEAN financial integration through the ASEAN Banking Integration Framework, or ABIF, Francisco said the wisest thing to do is to test the foreign markets by opening representative offices.
I think in general, not just BDO, but all the local banks are considering investing or expanding. But to a certain degree, we're also being careful, no? Kasi we're all positioning lang. But in fairness also, and maybe this is being, this is the humility that we Filipino bankers have to have. The combined size yata of the BDO, Metrobank, and BPI is still smaller than the big banks in Thailand, in Malaysia. So it will be hard to really compete. So we have to identify our value proposition. What's our value? Is our value really just to satisfy the banking needs of the OFWs? Maybe, because if I were a large corporate in Malaysia, as an example, why will they deal with the Filipino bank when you have the the Maybanks and the big CIMBs there? So yes, it's positioning, it's opening the market, especially even for trading and all that stuff. Pero at the moment, I don't see us significantly going there. Now, so that's in general, that's the answer. Specifically naman for BDO, in the last few years, we've opened rep offices in Korea, London, Japan. We have a branch in Singapore. I think wala pa sa Malaysia, but at least we have Singapore, which is relatively nearby, and we have Hong Kong. And then we have London, and we have the States. So at least that's part of expanding also. We start, generally, again, you walk before you run. The strategy we've taken is we open rep offices first, and then depending how the local regulators are strict, sometimes it's very hard to get a banking license. Then you progress from rep office to accepting deposits, doing remittances and stuff. So that's the progression. But yes, there is interest, but I guess the local banks are doing it cautiously now. Thank you for that question.
Meanwhile, Standard Chartered Asia Head for Public Sector Carby Leggett said The Philippines and Indonesia have resisted a global trend of declining credit ratings, and that is due to its strong economic fundamentals. In a briefing at the sidelines of the 5-day 12th ASEAN Finance and Central Bank Governors meetings in Cebu, Leggett weighed the impact of the latest global economic developments on ASEAN economies.
So in general, since the global financial crisis at the end of 2008 and then into the 2009, ratings have been on sort of a declining trajectory. That accelerated during the European crisis of a couple of years back. And what's happened more recently is some of the issues around the growth in fiscal deficits and by connection the rise in public indebtedness has also created new downward pressure. So today, in general terms, for every downward move in a credit rating, every 3 downward moves in a credit rating, you'll have 1 upward move. So what that tells us is the general trend is for the world of sovereign ratings to be moving down. Now, there's a couple of new trends that are starting to impact the ratings as well, and that includes rising U.S. interest rates, and that includes soft commodity prices last year, although we have seen commodity prices start to come off the bottom. These trends will continue, in the opinion of the credit rating agencies, to have an impact on sovereigns. And the general outlook for 2017 is that there are likely to continue to be more credit downgrades rather than upgrades. Now, in that context, if you take a look at ASEAN, actually the story is pretty impressive, pretty compelling. We have 2 governments in ASEAN now who are actually on positive outlook, meaning that there is a chance that their rating will go higher, not lower. Those 2 governments are Indonesia and the Philippines. And in both cases, the rationale for the positive outlooks is a general improvement in the overall macro fundamentals, very strong growth, sufficient external buffers, and importantly, very, very high-quality policy making and political policy effectiveness. So I think in ASEAN, almost in contrast to other parts of the world, the picture is actually pretty positive.
Meanwhile, Secretary of the Department of Finance, Carlos Dominguez, said the regional bloc's envisioned single market and production base under the ASEAN Economic Community will require massive investments, with a detailed AEC blueprint and a master plan on ASEAN connectivity or MPAC for 2025 developed by the member economies. The MPAC aims to harmonize customs procedures toward the creation of an ASEAN single window that harmonizes customs procedures to further enhance trade.
More extensive cooperation and more intensive integration have been beneficial to the economies of this dynamic region. All our economies are driven to a large extent by trade. The ASEAN Free Trade Area provided us a framework for dramatically increasing intra-regional trade investments. This allowed us to negotiate as a bloc with the larger trading economies around us through the Regional Comprehensive Economic Partnership. Over the longer term, we envision an ASEAN economic community that will provide a strong driver for growth among ourselves and for global growth. The regional economy we envision is a truly ambitious undertaking that will require massive investments. But we have momentum and the opportunity on our side. The support of the investor community will be indispensable for this undertaking to succeed. Our economies have much headroom for rapid expansion, beginning from a massive infrastructure build-up that will bring our region increased efficiency.
Meanwhile, ASEAN Deputy Secretary General Lim Hong Hin said ASEAN today has found itself in an interesting phase and in heightened expectation as the region remains competitive, vibrant, dynamic, and increasingly integrated.
Distinguished guests, ladies and gentlemen, today, ASEAN has found itself in an interesting phase and also in a heightened expectation. As a region that is competitive, vibrant, increasingly integrated and dynamic, ASEAN is projected to grow at 4.8% this year, well above the projected growth rate of the advanced economy of 3.4%. However, such an overall growth projection must be viewed against a backdrop of uncertain times with the rise of populism and protectionism sentiment, posing a challenging context to the region's integration agenda. In this regard, ASEAN will remain focused, committed to expedite, deepen, and broaden regional integration to cushion the impact of this uncertainty. While ASEAN is embarking on its new phase of regional integration in the uncertain global economic and political environment, the longer-term outlook remains robust and positive.
Is Asia bound to become the new mediocre? 83% of the ASEAN Asian finance ministers said no in a crowd survey during the official monetary and financial institutions forum at the Shangri-La Mactan Resort in Cebu. BSP Governor Amando Tetanco, in his keynote address, identified the following as Asia's 4 major challenges, which he also considers as opportunities.
First on my list is growing protectionism. So far, we've only heard the rhetoric from the U.S. president. There are still no clear policies, only desired directions. In the UK, while they have moved to trigger Article 50, the negotiations for the formal exit can take some time. How are Asian economies preparing for this? The level of openness in the region is varied. For some, like the Philippines, domestic aggregate demand has been the main driver of growth for years now. For others, like China, they have moved away from export-oriented to more service-oriented growth. In the meantime, intra-ASEAN trade has been increasing. In the case of the Philippines, ASEAN as a group has moved to become our #1 overall trading partner. By looking more inwardly, one may ask, is Asia limiting its growth potential? Or is it shielding itself from the adverse effects of shrinking trade? Second, financial spillovers. A disorderly reaction to possible U.S. interest rate hikes and broader uncertainty about asynchronicity of monetary policies in advanced economies could lead to capital flow reversals and spikes in asset price volatility in Asian emerging markets. This could contribute to large currency depreciation and inflationary pressures. Regional financial conditions are increasingly determined by global factors such as U.S. interest rates and investors' risk aversion. In addition, domestic vulnerabilities or slow progress on reforms could trigger a switch in investor sentiment, also leading to a sudden tightening of domestic financial conditions. How are Asian central banks positioning for the Fed's next moves? How have Asian corporates behaved since the Fed's initial moves to normalize, starting from the taper tantrum? With the rise in corporate leverage, have they hedged sufficiently? Or will they find themselves with balance sheets that are prone to repricing and refinancing risk as global monetary conditions get tighter? Third, the middle income trap. Many Asian economies are considered to be at a stage of development at which, historically, sustained rapid growth becomes difficult, or the middle income trap. After almost a decade of being above historical trends, the ADB observes that potential growth in emerging Asian economies appears to have declined by about 2 percentage points during the past few years. Sustaining growth through the middle income band requires significant reforms to the institutions of economic policymaking and political processes. Thus, for Asian countries to avoid the middle income trap, sound macroeconomic policies that can effectively counter boom-bust cycles can be looked at. policies that promote education and infrastructure, policies that create opportunities given favorable demographic trends, policies that build strong governance and institutions, and policies that foster greater trade integration. Fourth, demographics. Asia is entering a period of being at both ends of the demographic spectrum. While many Asian countries are concerned with aging populations, East Asian countries are concerned with aging populations, other Asian countries are less affected. An aging population increasingly requires policy action for East Asian countries. However, countries that have relatively younger populations, such as India, the Philippines, Indonesia, and Malaysia, will experience declining dependency ratios. Prudent policies can help mitigate the adverse effects of demographic trends.
Meanwhile, former Bank of Thailand Governor Teresa Wattanagase expressed optimism on ASEAN's economic future. She said the ASEAN region was up for long-term growth. Take a look.
In ASEAN, so the point is that we have to beef up our own immunity by making sure that our system is resilient. We have a good a strong banking sector to support the economy. The corporate sector is not overly indebted. For example, consumers are not overly indebted with high consumer debt, things like that. These are the measures that we on our own have to put in place. And you know, this part of the world, we all have the high reserves. And that's also a lesson that we learned from the previous Asian crisis. This is an insurance sort of. And these are all the self-protection that you have to put in place. And once you have that in place, you have less sleepless nights, fewer sleepless nights, you know, because you know that whatever comes from the advanced economies, at least we are in a better position to handle those. ASEAN is...
Meanwhile, Danny Kwa, professor at the Lee Kuan Yew School of Public Policy at the National University in Singapore, told fellow economists to look within to see the strength of Asian countries. Take a look.
It is true that Trump will move America towards greater protectionism, but at the same time, he seems quite open to bilateral trade agreements. It is true that Brexit seems to have closed Britain a little bit at the margin, but Britain constantly proclaims that it remains a trading nation. Britain claims that if it shuts off some of the trade with the rest of the European Union, that trade, that appetite for trade will be diverted to Asia. And Asia could well benefit from the way in which these evolving geopolitics are unfolding. Where there's a real danger, I think, is in the emerging narrative of populism, nationalism, and extremism in the West. And that we in Asia need to be very worried about. So I find that where the world has changed, I come out balanced. But there's a strong trend of optimism there. And that trend of optimism is that the way in which we in Asia think about serving national self-interest is that we believe the world is full of win-win propositions. That's a huge part of the success story of Asia. And if he thinks that way and he closes America off to us, we in Asia need to continue to tell the win-win proposition. The idea that Asia grows only because the West buys needs to be put on the trash heap of history. It is no longer empirically relevant. In the 4 years from 2008 to 2012, the US economy was flat on its back after the global financial crisis. Here is a test of the idea that Asia grows only because the West buys. There, the West was not buying 2008 to 2012. What happened in the world? what happened in the world was this. Asia grew by over $5 trillion between 2008 to 2012. The United States, less than $1.5 trillion. In an era when many people still believe Asia grows only because the West buys, the West, flat on its back, did not stop Asia from growing more than 3 times what the West did. Okay. And we will continue that story again if we are careful, if our policymakers continue to be wise. America's school children were told the story. We need to grow. We need to run the world because we have a duty to humanity. America is no longer interested in that narrative. Europe is struggling with its internal political problems.